Hello everyone, in this video we'll give a complete overview of the market and also show the coins that we advise you to buy. They have huge potential and low risk. And if you don't want to spend a lot of time watching news and analyzing the market for hours, watch this video till the end because we have made it for you already. Let's start with Bitcoin. We can finally see that the fall to $56,000 was a regular manipulation that completed the week-off reaccumulation. That is, all the time while Bitcoin was in the range, large capital was gaining position. So the sharp fall in early May was just the liquidation of long positions of retail traders. Since Bitcoin has updated its all-time high and is now in the price discovery stage, we can use a tool such as standard deviation projection to understand the long-term goals for this year. It will be $97,000 this year, but any asset needs liquidity to go in one direction or another. Liquidity is the stops of market participants. So liquidity can be compared to fuel. Any vehicle needs fuel to get from point A to point B, and the price doesn't move up or down just like that. It has a goal, and this goal is determined by the IPDA banking algorithm. Even though Bitcoin doesn't have a market maker, the price still moves from the supply zone to the demand zone or from liquidity to liquidity. Thus, in order for the price to go up, it first needs to go down and take the long stops at approximately $64,500. So why this level, you would ask? And I will answer. Behind this level, we have an imbalance which acts as a problem area and which can give a reaction to the price. To make our analysis objective, let's look at the volumetric analysis. It shows the following, and if the price breaks above current highs and returns to 72K, it could indicate a possible breakout as the market expects the upward move to continue. Prices range between a high of 64K and a low of 70K. It is important to note that the 64K price is key, especially if there is a significant drop, as this is the level that defines the risk. And here we see a temporary increase in prices during a sale on the spot market. So this usually occurs in the last hour of the United States trading session. So many of the positions purchased out of the fear of missing out, so FOMO, are still active, and prices could rise again if spot trades increase later. The selected daily candle has the following parameters. First, abnormal price increase. Second, abnormal sales volume according to Vol Delta. 3. There is no significant advantage in bid x ask. In the feed, a little more transactions were concluded using ask, market purchases. CVD shows a significant increase in market sales. The question is rhetorical: how to interpret this correctly, and more specifically, how abnormal price growth and abnormal volume are combined in market sales. Second, as with an abnormal volume of market sales, the advantage, albeit insignificant, remains on ask. There is a large volume of sales in the market, and the bid-ask delta indicator in this screenshot reflects executed orders. This means that while many market orders are buying, the volume of sales is significantly higher, and these sales are made through limit orders. At the same time, the cumulative delta shows a general decline. A large number of limit orders are being filled, but with a negative CVD, we can see a sharp drop. Also, since the crypto market is highly dependent on macro indicators, let's understand them, because now we're in a very unfavorable position. Imbalances in the United States labor market continue to weaken, with the number of job openings approaching pre-pandemic levels. FDIC, unreleased losses on securities in the first quarter, increased by $39 billion to $517 billion. The sharp increase was caused by higher bank losses on mortgage-backed securities due to increased lending rates. And this period marks the 9th consecutive quarter of abnormally high unrealized losses since the February began raising rates in third quarter 2023. So the Fed's balance sheet fell to $7.3 trillion and 2020 level. So since its peak in 2022, the balance sheet has shrunk by $1.5 trillion. USDT dominance is decreasing, indicating that many participants are active in the market. So high interest rates are shrinking Fed balance sheets, suggest that cheap money is no longer available. So the rapid growth of meme coins may indicate the creation of liquidity at lower levels and the formation of the potential for capitulation. If we consider the market in regulation to the seasons, then spring and early summer are always a fall for more than 7 years, and the whole summer is, as a rule, sideways, during which impulsive movements do not occur, and autumn and first half of winter, major impulse movements always occur. So this way, you can immediately understand which strategies to use. So in the spring, for example, you can consider shorts and, in extreme cases, martingale methods, but you must check it, otherwise you will lose your deposit. In the summer, it is useless to trade with a trend because there is no trend. It is worth using deviations in trading. In autumn and winter, it is advisable to use trend strategies, and if you get stopped out, consider opposite positions. But the majority still buy meme coins, go to allocations, and engage in staking for the sake of risk-taking. The market should rise when people have more money and when the Fed's balance sheet grows. If you see that people are investing in meme coins without having extra money, then there is a big chance of a fall, crisis, recession, etc. So the market was already growing during the fall of the Fed. Why do you think this could happen? Write in the comments, guys, and let's find the answer to the question together. Now let's look at Ethereum. At the moment, the price has reached the lower limit of the range, and this is a really good level for purchase. To make it clearer why we think so, let's take a look at this picture. The Ethereum algorithm, together with Bitcoin of course, is very fond of STB formation. With this formation, the price exits tops of long trades and continues to go up. With this formation, the price creates an effective structure. So let's stop for a second and look at the difference between an effective structure and an ineffective one. In the first case, the structure is ineffective because it creates a lot of liquidity at the bottom. 3 levels of liquidity were noted. So let's say the price drops a little to the first level. What's this? In this case, there are stop losses of long trades. A long stop loss is a sell order. A market sell order moves the price down. Further, the price goes down and reaches the second level with similar liquidity and goes down again. So in general, the price went up for a long time, but at that moment it created a lot of liquidity below, so that the price went down in one candle. In the second case, while the price goes up from point A to point B, it gradually removes the stop losses of long trades and leaves no opportunity for a huge squeeze. Every time positive news comes out, Ethereum or Bitcoin can plummet. For example, as was the case with the adoption of Bitcoin ETFs on January 11, 2024, it is worth buying on rumors and selling on news. When the news comes out, the majority of smart capital have already known about it for a long time and took advantage of it. They bought assets earlier. When the news becomes known to everyone, a major player needs to unload his position on those who are greedily buying with market orders. Once they have bought, the price is pushed down and the greedy longs are eliminated. So now on Ethereum there is a similar liquidity of longs in order to later go up. If we are talking about Ethereum and Bitcoin, we should definitely consider Ethereum, Bitcoin, and Bitcoin. Ethereum has already crossed EMA 200 7 times and returned back. This is one of the types of deviation. The more deviations they are, the stronger the growth and potential of Ethereum we will see. At the moment, the picture might look like Ethereum relatively to Bitcoin is insanely strong. We expect a slight decline, which also lead to a decline in Bitcoin's dominance, after which Ethereum will be able to grow sharply and pull many altcoins with it. The decline in Bitcoin's dominance will initially end the correction wave and will also become one of the main factors for the flow of liquidity from Bitcoin to altcoins and Ethereum. Now let's look at the coins in which you can enter a position. Coins to buy on spot if Bitcoin rises. ANTS has already been in accumulation for 880 days and has a huge potential for a breakthrough from $22 to $120. AAVE been in accumulation for more than 2 years and has a potential of up to $4,500. ARB showed 2 huge jumps in volume, being at this moment in the array accumulation stage. Considering that interest in this asset has fallen, we may soon see an increase up to $2.5. Now let's look at coins that can grow strongly and that have low risk. These coins will be from the RW WA and AI sector. Firstly, DWF Labs entered into an agreement with LTO project and BlackRock invested in RWA sector back in April. At the same time, while the entire AI sector depends in one way or another on Nvidia, they released a report back in April in which the company's profits exceeded expectation by 20% and created a positive narrative within this sector. These coins will be Ondo, TIA, Tensor, Tau, FTM, GRT, and FED. So guys, if you like this video and watched till the end, thank you so much. We have a cool community in Telegram. The links are below. And don't forget to subscribe, like, share this video, and till the next video, guys. Bye!